Welcome to this deep dive. We're looking at the key insights from the 2025 Berkshire Hathaway Annual General Meeting.
Yeah, it was a big one this year. Maybe 40,000 people there.
Huge crowd, and pretty significant with Buffett announcing he'll step down as CEO by year-end, handing things over to Greg Abel.
Right. And apparently he got a big standing ovation, and, well, he had a pretty funny take on why they might have been standing.
Always has a quip ready. So, look, we've gone through notes taken right there at the AGM, capturing what Buffett and Abel actually said.
Exactly. Direct quotes, reflections. It gives you a real window into their thinking.
So our mission here is to pull out the most valuable stuff for you, the wisdom on investing, business, leadership, life, all those core principles.
Without getting bogged down in every single detail, right?
Yep.
Focus on the long-term thinking, the patience, character, the big picture.
Okay, let's dive in. First up, Buffett had some interesting things to say about global trade.
He did. He was quite direct, said trade should not be a weapon. Simple as that.
And he connected it back to the U.S.'s own history, didn't he?
Yeah, how the country grew from, pretty humble beginnings. His point was that trying to shut out, 7.5 billion people around the world with trade barriers, that's a big mistake.
Because his view is that when the rest of the world does well,
It actually helps the U.S., makes everyone more prosperous, and importantly, safer, too. It's all interconnected.
interesting. Okay, let's pivot to investing. That long-term philosophy really comes through with their Japan investing.
Absolutely. They talked about holding those Japanese trading company stocks for 50 years or forever.
50 years or forever, that's commitment.
And they explicitly said they won't be selling any of it for decades, if ever.
It just perfectly illustrates that long game they play, doesn't it? It's not about next quarter's results.
Not at all. And it connects to his wider point about patience in investing generally.
Right, because those really amazing opportunities.
They only come along very occasionally, as he put it, which means you don't need to be, fully invested all the time.
In fact, he said investing just because you have cash lying around is...
The dumbest thing in the world. Pretty blunt.
It definitely pushes back against that pressure to always be doing something with your money.
And he also kind of waved away the whole idea of predicting short-term market moves.
Yeah, that was classic Buffett.
He said, nobody knows what the market's going to do tomorrow, next week, next month, but...
Everyone spends all their time talking about it.
Exactly. Because it's easy talk, but in his view, it has no value. Focus on the business, not the daily noise.
Makes sense. Now, a lot of reflection, naturally, on Charlie Munger.
Yeah.
His influence is just immense.
Undeniable. Munger's idea was focus on just a few really big decisions in life. That beats making tons of small ones.
Better outcomes that way. And Buffett even shared that slightly odd story.
Oh, the one about suggesting a sex change to test Munger's longevity? Yeah, that brought a chuckle.
Lighten the mood a bit.
Yeah.
But it was interesting hearing that Munger, later in life, actually got involved in some real estate deals.
Right. Even though you'd think stocks were always his main thing, Buffett figured if you'd asked him younger, it would have been stocks, no question.
And Munger's approach to understanding things, that's a key takeaway for anyone.
Absolutely. That idea. Don't take a position on anything until you can describe the arguments against it better than the person who is arguing with you.
That's deep. Really forces you to think rigorously.
Buffett called him a remarkable teacher.
Which brings us to why Berkshire generally prefers stocks over real estate. What was the reasoning there?
Well, partly the sheer scale of opportunity in the securities market. It's just bigger.
And efficiency, right?
Exactly. Speed and anonymity. On the New York Stock Exchange, you can do huge deals quickly. Nobody knows it's you.
Whereas real estate, and that funny line.
Every sentence is as important as a person.
Yeah.
And deals just take forever, even after you agree. Plus, stock trades basically always complete.
Got it. Okay, switching gears to something very current. AI, artificial intelligence, what's the Berkshire stance?
Well, pretty cautious, actually. It fits their pattern of not chasing the next new fashionable thing.
So no big rush.
Not really. It's more a wait-and-see approach. Wait until opportunities crystallize, as they put it. No big-time effort in AI investing yet.
And Buffett made that comment comparing AI to Ajit Jain.
Right. He said he'd rather have Ajit making a key insurance decision than have the top AI product.
Tells you a lot about where his trust lies, experienced human judgment.
Definitely. People over algorithms, at least for now in their view. This kind of leads into his thoughts on gratitude and luck.
Yeah, he was quite open about that, said the luckiest day of his life was just being born in the United States.
And acknowledged the luck of being born male and white, too.
Even joked about negotiating in the womb to make sure he landed in the U.S. today.
And his point was that people born now are just incredibly lucky compared to, say, someone in 1700.
He seems genuinely content, doesn't he? Enjoying his life.
Yeah, saying he gets to play around all day with things I enjoy doing. That gratitude seems really foundational for him.
It does. And maybe that connects to how they approach opportunities, being ready to act decisively.
I think so. He said a big part of Berkshire's success is being willing to act faster than others when the right moment comes.
But that's balanced with patience, right? You wait.
You wait patiently, yeah. But when that call comes, that rare, great opportunity, you don't want to be patient then. You act. Swiftly.
Because opportunities don't arrive neatly packaged.
No. He called business the most uneven sort of activity. You got to be ready to say yes or just hang up fast.
That mix of patience and speed. He sees confidence and decisiveness as essential, doesn't he?
Very much so. Said self-doubt just isn't compatible with business success. Maybe find another field if that's you.
And when things are going well.
That's the time to act promptly, not hesitate.
It all comes back to people, though. The trust factor seems huge for him.
Oh, definitely. He called having people's trust the great pleasure of the business.
And preferring individuals over institutions.
Yeah, wants to work with people he enjoys, people who exceed expectations, not just get reports from some faceless entity.
Which ties into their whole philosophy around human capital.
Right. Focusing on human assets, developing lifelong assets from the right kind of people.
Talent, enjoyable to work with, willing to do more than their share.
Exactly. That's what they value. And that feeds into why Greg Abel was the choice for successor.
What was the connection there?
Buffett mentioned Berkshire's wonderful group of businesses, their unique capabilities, and crucially, that mutual trust among a small group of key people who, really pull their weight.
And the culture that enables that.
Simple, really. Working with people who are wonderful to work with, it sounds basic, but it's clearly central.
That's good advice for anyone, really. Find your passion, your song.
Yeah, find the song, find the sound. And if you find it early, great, pursue it.
But also be careful who you work for.
Absolutely critical, because you pick up the habits of the people around you. Choose wisely.
It's all part of playing the long game, isn't it? Avoiding unnecessary risk.
That's a priority. Always ensure you can play the next day. Don't risk what you have and need for something you don't.
You only need to get rich once, he says.
Right. So don't get caught up in the very stupid things that might be happening all around you. Stay grounded.
And if you haven't found that song yet?
Don't despair. You will eventually. Sometimes it pays to wait, too. Patience again.
This long-term focus clearly impacts how they view financial results, too. They famously ignore quarterly earnings.
Completely. Buffett said no decision at a board meeting has ever been based on hitting quarterly or annual numbers.
It's all about where the company will be in 5, 10, 20 years.
Exactly. Which helps them avoid that temptation to, fudge the numbers.
He warned about that danger, didn't he?
Yeah, how focusing only on hitting targets can lead even good people to see playing around with numbers as perfectly okay. It's a slippery slope.
Okay, shifting to broader economics. Currency risk, what's their stance?
Pretty clear. They avoid investments in currencies they expect to significantly devalue.
Because governments tend to.
Devalue currency over time. It's almost a natural tendency, and it's hard to put effective checks and balances on that.
And history shows this happens repeatedly.
He pointed to significant inflations just since World War II, called currency value a scary thing, admits there's no foolproof system against it. Owning good businesses is the better defense.
Makes sense. On a more personal note again, he really hammered home the importance of who you associate with.
Enormously important, he said. Your life moves in the direction of the people you work with, admire, hang out with.
So the advice is?
Seek out people who make you want to be better. It rubs off, which loops back to choosing your work carefully.
Find a job you'd do even if you didn't need the money.
That's the ideal. And again, your boss matters because you pick up their habits.
It comes down to character, doesn't it? Both luck and character.
Yeah, treasure people with good intentions, good behavior. It compounds just like negative traits do.
So why does Buffett keep working? Is it just habit?
He wants something to stick around for, something beyond just money. Plus, he believes happy people live longer, and he clearly enjoys it.
Okay, let's talk market volatility. Investors often freak out when markets drop.
Right. And Buffett reminded everyone that Berkshire itself has dropped 50% 3 times, quickly, without anything fundamentally wrong.
And he thinks the current market isn't even a major bear market.
Yeah, his point is, if those kinds of swings really shake you emotionally, you probably need a different investment philosophy.
You have to adapt to the world, the market.
The market won't adapt to you. You need to check your emotions at the door when you invest.
And he actually expects more dramatic events in the future.
He does.
Oh.
Predicts periods of market shock in the next 20 years that could exceed anything we've seen as systems get more complex.
The potential for bigger surprises grows.
Wow.
Okay.
So resilience is key, which also applies to life setbacks generally.
Everyone faces them, right? Death being the ultimate one.
Exactly. And he made that observation about luck, how people who get lucky tend to credit themselves entirely.
Need that dose of humility. And perspective. He talked about being born now versus, say, in historical China.
Yeah, overwhelming preference for now. Just pure luck to emerge into the world at this time.
So focus on the positives.
Pretty much. Life can be, and often is, a wonderful life. Keep perspective.
He certainly keeps his sense of humor about aging.
Definitely. Joking about defying health predictions, carefully preserving ourselves for half a decade. Laughter helps, maybe?
Maybe so.
Yeah.
And he's stressed adapting, like that New England textiles example.
Right. You can't just rest on past success if the world changes. Challenges are actually good, keep you mentally sharp.
Like golf wouldn't be fun with constant hole-in-ones.
Exactly. But progress isn't always positive, is it? He raised concerns about weapons.
Weapons of mass destruction.
Yeah.
More countries having them.
Yeah. And scientific leaps like EMC key, like you can't uninvent that stuff.
Yeah.
Progress in weaponry has outpaced progress in human behavior. It's a serious worry.
It's a sobering thought. Which maybe brings us back to humility in investing.
I think so. You never get the answer. Just points where you have to act. So much is happening all the time.
And things rarely turn out exactly as expected.
Right. You have to constantly observe, constantly learn, constantly adapt.
Okay, let's circle back to the business itself. Insurance and that float. How's that looking?
Float continues to grow. And when underwriting is profitable, remember that's policyholders' money they hold.
At a negative interest rate, essentially.
Absolutely free money, he calls it. A huge advantage for their investments. People pay premiums, Berkshire holds the cash, invests it, pays claims later. If premiums exceed claims, the cost of that capital is less than zero.
Which fuels their ability to be patient and make those big bets when opportunities arise.
Precisely. Wait for those rare, real opportunities. Munger always said most big gains came from just a handful of ideas over decades.
You need to be ready when you actually have an edge, because it doesn't happen often.
Exactly. Be patient, then pounce.
What about legacy? Is Buffett worried about how he'll be remembered?
Honestly. He says his main concern now is just old age. Not worried about being remembered.
Things people forget anyway.
Yeah. Mention how even significant figures like Katharine Graham fade from memory. Recommended the movie about her, actually.
Interesting. Greg Abel chimed in on character and integrity too, right, from his perspective.
Yes, emphasizing how Buffett always considers the ethics, not just the money. Like questioning the importance of speculative plays versus doing the right thing.
Those values run deep.
Yeah.
And understanding the financials is key to that.
Mm-hmm. Really understanding what the numbers say, what they don't say, their limits, potential biases. Especially the balance sheet, he thinks there's more insight there than people realize.
And the role of teachers, mentors, came up again.
Huge impact. Make the most of people who help you grow, move on from those who don't. Buffett felt lucky to have had many great ones.
Abel then talked about preserving that Berkshire culture and values moving forward.
Absolutely. Said it's founded on Buffett and Munger's values. Maintaining the reputation in investing and operations is priority one.
Along with that fortress balance sheet.
Crucial. Ensures they don't depend on anyone else financially. Stay independent.
And the capital allocation strategy under Abel. More of the same.
He said very similar or identical to the last 60 years. Reinvest in existing businesses first, then look for good acquisitions.
Same ownership mindset, whether it's 100% or a minority stake.
Right. And you have to really understand the business long-term, 5, 10, 20 years out before you invest.
What should young people learn if they want to work at Berkshire someday? Abel's take.
Simple answer, echoing Buffett. Hard work.
Just plain hard work.
Yep, strong work ethic, wanting to contribute, that's key. And often working hard helps you find what you love anyway. Buffett told a young person there to stay curious and read like Munger always advised.
Okay, what about dealing with regulators and managing risk?
Key principle. Avoid situations where the risks are just unreasonable for an investor. Defined return for defined risk.
And if the risk becomes unbounded?
Then the model breaks. Don't try to solve unsolvable problems, especially with other people's money. You need to either be in charge, holding the pen, or know when to walk away.
It comes back to stewardship. It's shareholders' money.
Right. Avoid dumb things, advocate for sensible systems, but be willing to pull out if they aren't supported.
Buffett even gave that young investor some specific advice on talking to CEOs, didn't he?
Yeah, the humorous bit about managing time, but also asking CEOs who their best competitor is and who they'd short.
Why those questions?
Because you learn a lot by listening to managers talk about their competition. Reveals a lot.
But don't just rely on what the company tells you through investor relations.
No, he was pretty wary of IR departments. Said their job is often just to push the stock. Do your own homework. Think for yourself. Read Berkshire's own stuff.
Okay, thinking about Berkshire's earning power. It grows over time, but unevenly.
Exactly. Retained earnings drive it up, but it's lumpy. And they tend to get the best deals when everyone else is pessimistic.
The less obvious the market, the better the opportunity.
Kind of, yeah. More subtlety means fewer people chasing the same thing.
So if Berkshire stock dropped 50% tomorrow,
He'd see it as a fantastic opportunity. Zero emotion tied to the price, purely rational decisions.
he also touched on capital light versus capital heavy businesses.
Right. Big advantage if you can make lots of profit without tying up tons of capital. Apple was his example, buying back shares.
But some big tech companies are getting more capital heavy.
Yeah, the Magnificent Seven group, generally needing more investment now.
What about managing other people's money? The investment management industry.
He noted how lucrative it can be, earning that override or fee. Used the example of Berkshire shareholders potentially paying $8 billion a year in 1% fees.
But that's not how he and Munger did it.
Nope. They invested their own money alongside shareholders, shared the pain if things went down. Skin in the game.
Finally, some thoughts on capitalism itself.
Called it an incredible success in the U.S., use that analogy. A magnificent cathedral of production.
But with a massive casino attached.
Yeah. And the challenge is making sure the casino doesn't overwhelm the cathedral. But human nature is drawn to the casino.
People behave according to incentives.
Pretty much. And it's easier to do dumb things with other people's money.
He reflected on his own start too, didn't he? Reading everything in the library.
Yeah, teachers having a huge impact. His early, intense reading on investments, having a natural feel for numbers.
Finding what you're wired for early on.
So important. Everyone's different. Find your fit. Better to read Ben Graham than try tap dancing if that's not you.
And good teachers and mentors are willing to help.
Definitely. People like Dave Dodd, they generously share knowledge with genuinely interested students. Huge impact on his life.
But he had some serious warnings about government finances, right? The deficit.
Very concerned. Said the current path is unsustainable, quoted Herbert Stein. If something can't go on forever, it will end.
And the currency is most at risk.
Particularly vulnerable to fiscal irresponsibility, yeah. And there aren't strong enough checks and balances.
It's a long-standing problem in democracies.
Controlling spending and revenue. History's full of examples where it went wrong. Said Volcker saved the U.S. system once.
He also invoked Benjamin Franklin.
Yeah, huge admiration for Franklin's mind, his wisdom. Franklin understood the downsides of success.
What advice would Buffett give Franklin about modern destructive tech?
Basically, that lecturing people after you've won doesn't work well. Breeds resentment, better ways to handle power.
Speaking of power, the atom bomb.
Acknowledged it was probably unavoidable at the time, but the danger now is multiple nations having that power. Problems get way harder to solve with more players involved.
Still, he sees incredible progress in his lifetime.
Absolutely. The big question is how we maintain and build on that progress.
And a stable currency is fundamental to that.
Crucial. Debasing the currency hurts those who trust the government, helps speculators, bad for society.
Okay, let's hear about Greg Abel's management style directly from him.
He described it as being curious, asking questions, offering comments on operations and strategy.
But respected the expertise of the managers running things.
Yes. And identifying, discussing opportunities for improvement or new ideas.
And Buffett thinks Abel is actually a better manager in some ways.
Said Abel works harder. Believes performance could be even better under Abel in many areas.
Interesting. What about leadership and culture generally?
Different people need different styles, but managers need to be admired, lead by example. Quality is easy to lose, hard to rebuild, need ethical leaders focused on the organization.
Buffett also distinguished operating from investing.
Called operating a lot tougher. investing from the outside. Comparatively easier, a pleasant life for him.
Though not necessarily more admirable.
Right. And his greatest privileges.
Never having to work for someone he didn't admire. And the autonomy to run Berkshire his way.
Which brings us full circle to the future, the transition.
So, confirmed, Greg Abel becomes CEO by year-end. Buffett stays involved, hopes to be helpful.
But Abel has the final say.
On operations, capital deployment, yes. And Buffett's shares. He's not selling. Plans to give them away over time. Because he thinks they're better off managed by Berkshire.
Exactly. Purely economic decision. And he might be helpful in big investment moments because his interests are totally aligned.
And the meeting wrapped up after that.
Yep. Buffett's closing words and that humorous nod to the enthusiastic crowd.
So wrapping this up, the big themes really are patience, long-term thinking, ethics, learning, adapting.
Absolutely. From both Buffett and Abel, it's clear those core principles aren't changing.
And it is a significant moment, this leadership transition for Berkshire. So maybe a final thought for you listening.
Yeah, think about how these ideas acting decisively on opportunity, playing the long game, the importance of character apply not just to money or business, but to your own life.
What's the song you're trying to find? What kind of music do you want to make on your journey?
Something to ponder.